Welcome to the Real Estate Guys radio show. I'm Robert Helms. If you're just getting started in real estate, it may be daunting to look at today's prices and financing. So how can you get started in a great cash flow market with not a lot of your own capital? That's exactly what we're going to talk about today. And we've got two outstanding guests on the Real Estate Guys radio program. The Real Estate Guys are throwing a party and you're invited. Join us at the New Orleans Investment Conference, November 1st through 4th. Now in its 49th year, it's the world's longest running investment conference and features some of the biggest names in economics and investing, including James Rickards, George Gammon, Danielle DiMartino Booth, Rick Rule, and Peter Schiff. The Real Estate Guys are speaking in multiple sessions, attending lots of others, and we're hosting an invitation-only party one of the evenings for our friends and listeners, including some VIPs for you to mingle with. So make your plans to join the Real Estate Guys at the New Orleans Investment Conference. With all that's going on in the world, no serious investor can afford to miss it. Send an email to neworleans@realestateguysradio.com and we'll get you all the details. That's neworleans@realestateguysradio.com. And we'll see you there. Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me in the co-host seat, it's our financial strategist, Russell Gray.
Hey, Robert.
You know, we've been talking the last several weeks and months about all kinds of heady stuff, all the news of the economy, bank failures, the Federal Reserve, and those are all things that we need to pay attention to as real estate investors. I think early on, part of our issues where we didn't pay attention to those things. All we thought was about real estate, real estate, real estate. And yet, investing in real estate depends on you actually selecting markets, finding teams to help, and locating properties that are going to work. On today's show, we're going to address how you get started in real estate investing. And if you're looking to acquire property, how do you get past all the headwinds? Things like uncertainty in the market and interest rates being so high and all of those things that play into investing. And we're going to talk about one of our favorite marketplaces, especially for newer investors.
I think that anybody who's paying attention to the financial news knows credit markets are changing. Obviously, interest rates have changed. It's had an impact on real estate. People who own homes aren't selling them because they don't want to give up those low interest rate loans. People who might reposition equity that they have, meaning they would refinance to pull the equity out and use it as a down payment on an investment property. Some people are rethinking those decisions, especially in speculative markets where you're hoping for price appreciation when so many people are thinking there's some headwinds to equity growth in real estate. And so all that means is that you need to identify kind of what the circumstances are, what the macro environment looks like, and then you begin to make strategic decisions on how you can mitigate the risks that are being caused by the changes, and then where do you go to find the opportunities? And today we're going to be talking specifically about just getting back to bread and butter, basic Main Street real estate, little greenhouses that cash flow in resilient markets managed by great teams, and that actually benefit from some of the things that are going on that are freaking some people out.
Our framework for investing in real estate looks like this. Picture 4 boxes on top of each other. The top box is what we call your personal investment philosophy. That's who you are as an investor, why you're attracted to real estate, and what you want investments to do for you. We're not going to talk about that today, but there's a great resource for that we can tell you about before we're done, and it's completely free. The next box underneath that is, once you've figured out who you are as an investor, now you need to find a market or markets that work for your personal investment philosophy. A market could be a geographic market. We'll talk about one today. A market could be a demographic market. Who are the people you want to serve? There's lots of ways to approach what a market is in real estate, the types of real estate that you're interested in, whether it's retail or commercial or multifamily. And then the next box is, once you've identified the market or market you're interested in, now you got to put together a team, and the team is critical. We did a show not too far back in the archives about selecting your team because it's important you get the right players. There are transactional team members, people that you only use during a transaction, and then there are folks that kind of play next to you, people that help you with tax strategy, estate planning, the legal side. Once you've figured that out and you have your team together, now the last box is a property. once you've done the other things, now it's pretty obvious where you should buy, what you should buy, and when you put your team to work on it, you can get some great answers. When we see people do poorly in real estate, it's often because they just jumped right to the property. They found a house they liked, and they didn't think through all the rest of those things. So it's critically important, especially if you're just starting out, or maybe you're starting over and you're thinking, well, gosh, it's a terrible time to buy now because, rates are up. Well, that may be true. And Russ, you talked about this, but I want to make sure this doesn't get lost on people. I'm on a lot of lists for real estate brokers and agents and folks that service those people because I used to be in that business a long, long time. And there was this newsletter that just came out from a big group that specializes in helping real estate agents saying, hey, all that buyer's market that we heard was coming isn't here yet. Inventory's still tight. And the reason is, you hit on this, Russ, people aren't moving up like they used to. After I've been in a house for a few years and I'm maybe getting a little more money and I'm doing well and my kids are growing and they're having their friends over, I think, hey, I'd like to be in a little nicer neighborhood, maybe get a house with one more car garage, maybe another bedroom. And as long as interest rates are reasonable, it makes sense to do that. But right now, one of the big assets, if you want to call it that many people have is their loan. Why would you want to replace a 3.5% loan with a 7% loan? Well, investors don't exactly think that way.
No, not at all. If you can make money on the spread, then whatever the cost of money is doesn't matter as long as there's meat on the bone, there's profit. Still, it's hard to give away that low interest rate loan. Now, we just came back from Rebel Capitalist Live, and we got a chance to hear a guy named Jeff Snyder, and he made a fairly compelling argument for the reasons why he thinks interest rates could be and probably will be headed down in the near future. If, in fact, that's true, and you were to purchase a property today at today's price based on higher interest rates, then somewhere down the road, when those lower interest rates manifest, you're going to probably see a pop in equity as a result of more purchasing power coming back into the market. So you do need to be a little bit contrarian if you aren't afraid of staying in it for the long haul. Obviously, don't buy a property you can't afford by the cash flow, hoping that something that is outside of your control, like interest rates, are going to save you. But if you are comfortable buying a property at a rate that is maybe higher than the normal or what has been recent history and where you think they're going, it could be actually a window of opportunity. So there's that to take into consideration. At the end of the day, you get one chance to negotiate the price of the property. And then after that, you can adjust the financing as it allows. We've talked about this in the past, but the way to think about it is that if interest rates go up from where they are right now, you're going to be happy that you got a loan at today's rates. If interest rates go down from where they are here, you're going to be happy you bought a property at today's prices. And then you can always redo the financing later. If you buy a property that makes sense today and the financing works and doesn't change ever, then you'll be happy that you've locked in your cost. And over time, if rents change to the upside, that's great. You do have to be concerned if they change to the downside. But that's why affordable markets and affordable properties tend to favor, because as long as there's a lot of people demographically above your price point, then those are the people in a weak economy that move down and place demand on affordable housing. You probably paid attention and realized that throughout the country, one of the biggest problems, at least in the United States of America and probably globally, is affordable housing. So if you end up buying affordable housing and renting affordable housing, the probability in a softer economy is more people are going to need it. And when you've got an environment where it's very difficult to build brand new affordable housing, that's one of the challenges the industry faces. There's a lot of reason to like this particular niche. That's why we thought it would be a good idea to get back to basics and highlight that in today's show.
We have two guests today that are two of our very favorite people in real estate because they've been at it a long, long time. We met well over a decade ago, and to watch their trajectory has been awesome. They are in a market that was once considered just a cash flow market. In fact, Forbes rated it the number one cash flow market in America, which meant that it wasn't really appreciating much. And yet what's happened over time as cash flow increases is property values have gone up. When we come back, you'll meet our good friends Terry and Liz from Memphis, Tennessee, today on the Real Estate Guys radio program.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
Hey, this is Brad Sumrock, and I'm super excited to share with you about our 6th annual Apartment Investor National Conference, AIM-NatCon. This is the 6th year we've done this event, and in the past we've had world-class speakers like Robert Kiyosaki, Grant Cardone, Jesse Itzler, Ed Milet. And this year, it's going to be so many great speakers. We already have some lined up. It's going to be an outstanding event, whether you're new to apartments, already syndicating large deals, already have a successful business. If you want to learn how to make more money and pay less taxes with apartment investing, this is the event for you.
Join the Apartment King, Brad Sumrock, and our rock star lineup of speakers at the 6th Annual Apartment Investor Mastery National Conference, AIM-NatCon 2023. It happens in Dallas, Texas, August 25th through 27th, and you get all the details by sending an email to aimnatcon@realestateguysradio.com. That's aimnatcon@realestateguysradio.com.
Hi, this is Garrett Sutton, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate and Start Your Own Corporation. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate, paper, and bullion holdings with the right mix of LLCs and corporations. Our firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention the Real Estate Guys for a free bonus. That's 800-600-1760 or corporatedirect.com. We look forward to assisting you at corporatedirect.com.
Hi, this is Darren Hardy, author of The Compound Effect, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program, now in our 27th year of broadcast. We're talking today about getting started as an investor and what kind of markets and properties are available. Of course, most investors start with single-family homes, and you got to pick a place to have those homes. So one of our favorite markets is a market where there's great demand for tenants. There are multiple drivers in terms of industry, and houses are still affordable. That is fabulous Memphis, Tennessee. Let's welcome back to the show our good friends Terry and Liz from Midsouth Home Buyers. Hey, guys.
Hey. Thanks, so Robert and Russ. Great to be back.
So good to see you. We go way, way back, and I remember the early days of coming into your town and kind of learning about the market, and you guys just blew us away with your boots on the ground knowledge. You know, there's head knowledge. I listen to a lot of podcasts, I read a lot of books, and there's seat knowledge from doing the thing. So I guess big picture is, tell us what's happening in the Memphis market. This is not necessarily a tier one market, if you will, but it's been a strong income market for a long time. What's going on in Memphis?
Man, life is good. We were able to set our investors and a lot of your listeners up with about 470 turnkey investment properties last year. Terry, how many would you say we're on track to do this in the next 12 months?
About 525. There's a little bit less demand since interest rates have gone up. So we've been able to buy houses for a little bit less money, and we're selling them for a little bit less as well. So price to rent ratios are more favorable, and we're able to find more properties. So it's good. It's a good time to be in real estate investment for sure.
Well, it's such a good point. I'm glad you brought that up, Terry, because so many people are saying, well, you know, if the rates are doubled and my payments doubled, it's probably time to sit out the market, which is exactly why I wanted to have you guys on, because the part people don't think about is providers like yourselves. You guys provide everything turnkey. So when someone buys a house, it's got a tenant, it's been fixed, it's beautiful. That has become less competitive. Your competitors have shied away, and therefore you guys have better access to inventory. And like you've always done, you kind of pass that along to the investors. And the reason that is important is you always want to understand someone's agenda. If I have a single house to sell somewhere, I'm going to try to get the most out of it. But if, like you guys, I sell hundreds of houses a year, I want to keep my clients happy.
Well, it's true. And we're fortunate that we've been in business for a little over 20 years, and we've got great relationships with real estate agents and wholesalers. And when it gets tough out there, when there's a change in the environment like there has been with interest rates, the relationships start to pay off. So we're able to put properties under contract sometimes for less money than our competitors because the agents and wholesalers know that we're going to perform. And of course, we pass that savings along to our buyers. And when you combine that with the fact that, we own our own material purchasing department, so we don't have to buy from Home Depot and Lowe's, and you combine that savings, it's been able to give us a competitive advantage there, and we're very grateful for it.
Yeah, it's a huge advantage. I remember when you were at your office where we toured several times and you had a decent amount of supply, but when you guys moved to a much bigger facility, it's like a huge warehouse store of your own. And that's important not only because when you need a part, you don't have to go to the store and wait and worry about logistics and supply chain and also, all of that, but also that you have better pricing because you buy in bulk. And anyone who's seen your properties know they look beautiful, but they all look similar. And that's just a great operational difference. So let's talk about the tenant side. I asked you about the market, and the market sounds still strong, but this has always been a market dominated by renters. In addition to doing all the rehab and all those things you guys do, you also are the property managers. So what does it look like in terms of tenancy and rent rates and occupancy and all that?
Man, that also has just been fantastic. We have been hovering between a 98 and 99% occupancy rate and running our average 4-year renter stay. We rebounded to 2019 collection rates by 2021. Tennessee was very sort of COVID resilient, if you will, as far as the laws and how that shook out. I get asked about that quite a bit. And then rental demand, rental rates. Man, did I underpromise appreciation these last 14 years working for Terry. We'll always play it so safe on future predictions. We always just kind of like to speak historically, but we've seen 18% appreciation rates in one of the zip codes we work in the most. For a cash flow city, it's gone really well. And then there's a ton of excitement about Ford is putting out a $5 billion electric car plant. It's going to be about 45 minutes from downtown Memphis. It's called Blue Oval City. It's in a town that has a population of 600. The entire workforce is going to be from North Memphis. And that's our bread and butter. So we're just really excited about that. There was some regulations passed recently that are supposed to support electric car sales. And it's just the whole sort of city is humming about this huge electric car plant coming up. And Ford says they chose Memphis because we have the workforce for it. Man, that workforce is our renters. So our renters are having more employment opportunities. They're getting raises and everything's already running really great, but that's not going to hurt us. That's going to help us a lot.
Yeah. FedEx, Nike, Amazon, everyone's increasing what they're paying our residents. So we're in the right spot as far as, right spot in the country.
Well, we've always loved the fact that Memphis has diverse economy. And obviously there's the big FedEx story. Anyone who's been to Memphis knows that at night, FedEx takes over the commercial airport, and it's just crazy the amount of things that happen around that. But this is great. One more industry. And I know that when we come into town, we often like to meet with the Chamber of Commerce, not because they talk that much about real estate, but because they are in the middle of courting businesses and industry and all that. So it's great to hear when those get announced because that does translate into jobs. And I think the point is a good one. Those are the kinds of jobs that the houses that you guys sell tenant up with. So that's perfect.
Yeah, if a bunch of doctors were coming to town, it wouldn't help us as much, but a car plant is perfect.
Absolutely.
So the market sounds strong, and that's all good. Let's get through kind of exactly what you guys do. We've talked a little bit about the efficiencies that you have, but you look for specific properties in the areas that are proven because you know the market so well. And then you have a scope of work that you want to do. And take us through that. I think this is one of the places that you guys really excel with your in-house team and the speed at which you can move.
Sure. Well, we specialize in houses that need lots of repair. So a lot of the houses that we buy, folks have moved out of because a tree hit it, or there was a fire, or there was maybe a burst pipe or something. So we specialize in picking up houses that other folks don't want, and we can get a good discount on that because we're efficient at major repairs. And because we own our own electrical, HVAC, and plumbing outfit, we don't have to hire outside contractors, and we can keep it all in-house and have that vertical integration and efficiency. So one of the upsides of when you're done with rehabbing a house that needed all of that work is you've got a brand new house. And, we like to talk about how we have an assembly line and we've got all these supplies laying around this assembly line, and we just put a junky house on this assembly line and all the same materials jump on. So at the end of that assembly line, you've got a house that, at least on the inside, looks pretty much like every other house. We've got 4 or 5 different paint styles for the outside for some variety. But when it comes time to quickly take care of a resident when something breaks, or take care of the investor as far as the cost of a long-term repair, we're able to provide value on both sides of the coin. And that's something that we work on every single day.
Yeah, I think that both sides of the coin thing is really important. We obviously, it's fantastic for the investors to be having a new roof, new central heating and air, and a new water heater with every single purchase. But, Mrs. Smith, the renter, being able to call in that repair on her way to work and come home and it's taken care of. I think particularly in Memphis, we ask every renter that comes to us, why are you leaving your prior landlord? And the answer is, my landlord won't fix anything.
Yep.
Over and over and over again. And the reason I say particularly in Memphis is that we're Forbes' #1 cash flow market. Everybody knows Midsouth ourselves. We have investors in 17 different countries around the world. But because of that, you do have pop-up fly-by-night property management companies. You have investors that overpaid for under-renovated property elsewhere. Now they're exhausted of fixing things, or they're trying to self-manage from California or New York. And so I really believe our 4-year average renter stay dovetails with that depth of rehab. And then the fact that we're giving good people good housing is great on top of that.
Yep. Well said.
This all feeds into your overall philosophy. And if folks haven't heard about what you guys do, many people that want the quote unquote fixer upper, they're looking for a house with the least amount of work necessary. If I can just put paint and carpet on it, that's a home run. But as you mentioned, Terry, that's actually not a home run because most of the value has been wrung out of a purchase like that. When you buy something that needs major work, sometimes structural work, often a roof, all the systems and components, and the house has not been getting the TLC that it deserves, it gives you guys more margin, and it also lessens the competition. But on the side of the investor, it gives them a house where there's not a ton of deferred maintenance.
It does, absolutely. And as Liz mentioned, that parlays over into the resident, because if the water heater's not going out, the HVAC's not breaking, they don't have a roof leak, they're so much happier. And I like to say, the longer a resident stays in a house, the longer they're going to stay in a house. I know it sounds kind of silly, but people get entrenched into their neighborhoods. And, it's our experiences that if we can make it, a good, nice, easy go for a resident without repairs, they're going to want to continue to stay. And then when something does happen, we're Johnny on the spot.
Well, that's a big part of your teamwork as well. Just having the ability to send someone out that works for you, not get on a waiting list for a third party to get out there and get it handled. That's certainly a big part of it. But also, I think you have a distinction when it comes to property management. Many investors think of property management as a necessary evil, but you've really made your business property management centric. I mean, the team that you have in place, they're not what you would expect. They aren't bill collectors. They're friendly people. They have great attitudes. They really do endear themselves to your tenants.
I tell you what, the toughest thing is collections. Hard times befall all of us, right? And so when Nikki has to work with someone and have the painful conversation of, Mrs. Smith, I understand what you're telling me, and I'm in your corner. But if you don't pay, you can't stay, and I hate it. Nikki knows that unless she gets a big hug when somebody has to move out of their house because life has happened to them, then she hasn't done her job properly, because we're in the corner for all of our residents, even the few that are on tough times. And so I was pleasantly surprised. I was in the office on Saturday, and a resident came in, and she doesn't work with us, and she doesn't live with us anymore. But she came in to pay a little bit of a balance that she had and told me that she was looking forward to moving back into one of our houses again. And it just warmed my heart. And it's I have to take my hat off to Matthew Van Horn and to Robin Thatcher and to Nikki Jordan and everybody over there on not the collections team, but the resident retention team, because they do a beautiful job. And I appreciate you bringing that up, Robert.
Well, it's, on average, if you look in different cities, people are averaging a year and a half, maybe 2 years in terms of turnover. But 4 years is extraordinary in this business. And it's not just because it's a great market and you have great properties. It's because people feel cared for. And that's so important, obviously, to you guys, but ultimately to the investors that buy these houses, because you are their eyes and ears. Most of them don't live in Memphis. Many of them, our listeners and your other clients that live around the world, they rely on you guys to be doing the hard work of managing the property. Now, I say hard work because if you're lousy at it, it takes a lot of work. When you're good at it, there are times when it takes that work, but the rest of the time is smoother sailing.
Absolutely. One of my favorite sayings of Terry's is, you can manage a marginal deal to success, and you can manage a good deal right into the ground. And brick and mortar does not write rent checks. People do. Another thing I love about our model of taking the most sort of trashed house on the really cute street is, we've all probably heard some of the negative press about laptop landlords or flippers, investors squeezing out owner occupants, and maybe the myth goes slapping a coat of paint and jacking the price up. We are actually adding to the inventory of affordable housing in Memphis. So we're not soaking up any inventory that would be available to a first-time home buyer. Fannie Freddie wouldn't lend on these houses we're buying on. They're typically vacant. We're elevating the property values for all of the local owner occupants when we take that junky house and fix it. And then we put somebody with a great job and a clean criminal background in that house that is now completely transformed. And we added an affordable rental unit to the overall thing. So we're not sort of leeching off of our community. We're really building it up. And we love coming to work for that. And then we treat that renter with dignity and respect, and while protecting our investors' bottom line.
Now, we've got listeners all over the place and of various levels of experience, but we've always said these houses can be excellent opportunities for that first-time investor. Maybe they own their own home, but they've never really invested in a house. I know, Liz, you've dealt with those folks over the years, and they need a little more hand-holding, and maybe it takes a little longer, but talk about your heart for the brand new landlord.
I love it. Some of our investors are renters. In Manhattan, they're renters in Santa Monica. They're paying a rent that would be the mortgage on a mansion out here easily, and the bar of entry is just sort of $2 million or more for where they're at. And so I might be helping them with their first real estate purchase in life. And it's fun. I get the person that has 400 questions gets the exact same experience as the person that has none. You end up with the same kind of awesome products. Terry does these, we call them our 45-day check-ins, but 45 days after you close, you're going to get an email from Terry asking your thoughts on the process. Is there anything we could do? Not to pat ourselves on the back, but we get well-oiled machine a lot. And being in business for 2 decades has given us a lot of time to vet out the title company I'm going to connect somebody with, the lender I'm going to, man, do I work those lenders on interest rates, closing costs, the whole team you plug into. I'm going to get somebody a quote for homeowners insurance as a courtesy through the property from the people we insure with, because they have great policies for landlords. So I don't think there's a such thing as a passive in purchase. It's definitely passive after that, but we're going to cross those T's and dot those I's as much as humanly possible. And it's fun. We're real estate nerds around here, and we like talking about it.
Well, of course, something that happens with a new investor is they may not have as much money to spend, and we'll talk about financing after the break, but let's just give the listeners an idea of your price points. What does a great rental house cost in Memphis, Tennessee?
I'd say right now the average price point of a typical 3-bedroom property that's 1,200 square feet is somewhere in the neighborhood of $140,000.
Yeah, 95 to probably 160 is going to
Yep.
span that whole ratio. So it's a great entry level price point. It can help you expand your portfolio rapidly. And as a side note, we are now offering group tours once a month. And 95% of our investors have never set foot in Memphis. It's totally fine to never come. You're in the norm if you don't. But I love showing off our peaceful, quiet neighborhoods with the lawns mowed, standing in the front yard of a $110,000 house and hearing all my Californians and New Yorkers tell me how expensive this house would be where they come from as we go through each one. And so we actually give $500 credit towards your closing cost as a thank you to if you come and visit us, because it'll just push somebody's confidence through the roof if you come in and see it with your own eyes.
Absolutely.
Well, we love that, right? Back in the day, we were doing the field trips to Memphis, and it was so eye-opening to actually be there and, as we say, kick the dirt. It's one thing to learn about it. It's one thing to hear you guys year after year after year. We know lots of listeners are tired of hearing about Midsouth, but the reason we keep talking about it, you hit on earlier, and that is with all the Real Estate Guys listeners over the years that have bought there, we don't get any negative news about you guys ever. Quite the contrary. It's always, the gold standard in many ways. And I think that's just because of this long-term commitment to the market, Terry being born in Memphis, and the fact that through thick and thin, high and low, no matter what the market does, you guys figure out a way to continue to bring inventory. I think the big question has always been, well, not always. In the beginning, we didn't have this problem, but we started pointing, we started doing the trips, and before you knew it, there was a long waiting list. And if you've been aware that it was up to a year to wait for a house, that's the hard question. I'll make them answer when we come back. We have Terry and Liz with us from Midsouth Home Buyers. More when we come back, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hi, this is Kevin Harrington, an original shark from the hit TV show Shark Tank, and you're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, we're making our annual trek to New Orleans for the 49th annual New Orleans Investment Conference. It's an awesome time. There's a ton to learn, and the speakers are incredible. For all the details, send an email to neworleans@realestateguysradio.com. New Orleans @realestateguysradio.com. You'll get the details plus an invitation to the legendary annual Real Estate Guys Party, which takes place one of the evenings. We look forward to meeting you there. We're talking about getting started with affordable cash flow property, and we have Terry and Liz from Midsouth Home Buyers. Before we get back to that interview, it's time to play real estate trivia. That's your chance to win a prize by knowing the answer to a trivia question that has something to do with real estate. This one's hot off the presses. As soon as you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. Include your name, the answer to the question, and your physical mailing address. If you're the first person to get it right, you're going to get an awesome book called Don't Quit. Stories of persistence, courage, and faith. It's a collection of excellent stories from folks who have lessons to teach. That can be yours if you know today's real estate trivia question. Last week it was Ask the Guys, and we asked this: which country is affected the most by hurricanes? Well, the answer is China, followed by the United States and Cuba. A timely trivia question given that we're entering hurricane season, at least in the U.S. Here's our real estate trivia question for this week. Where is the world's largest gas station? You have all the gas stations in the world. Which one is the biggest? And here's a hint. It just opened. If you think you know, or maybe you live near it, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. We'll need your name, the answer to the question, and your physical mailing address so that if you're the winner, we can send you Don't Quit. Stories of persistence, courage, and faith. That's today's real estate trivia question. We're talking about getting started in real estate investing, and one of the great markets you can do that in is Memphis, Tennessee. Houses under $150,000, and of course, nicer houses at higher price points. But if you're just getting started, this could be a market worth considering. We have Terry and Liz with us, the dynamic duo. Company's actually a lot bigger than just the two of you, and folks will figure that out pretty quickly when they start hanging out and if they come on the tour. But you know, as you've been successful finding great submarkets and putting in awesome tenants and all those things, it's created more of a bottleneck because, Terry, you have over the years refused to change your buying criteria. And that means that there have been times when you're not willing to take on as much inventory because you can't be sure of the product. And we've certainly had that candid conversation over the years. And that has resulted in there being a long wait. So let's talk about that. Let's talk about the elephant in the room. You know, in many cases, people get all excited. They want to buy a house, and then you have to deliver the news. Well, you might not be able to get it right away. What's that look like these days?
Sure. And real quick, you know, as you mentioned, there are a lot of houses that we're just not going to buy that we could. You know, you can't buy too low because that doesn't work out for you. You can't buy too high because then the cash flows don't work out. You know, we're just really fortunate. Like I said, you know, we've been in business for over 20 years, and we've got so many loyal and repeat buyers and referrals, and we're so grateful for everyone for that. And the other side of that is it has, you know, posed longer wait times, but because of the environment we're in right now with interest rates, the wait times have gotten a little shorter. So for finance times right now, Liz, where are we?
Roughly about 6 to 8 months is my estimate. I think we're going to run towards the 6 side is my hope. We've got a bit of new construction build to rent coming down, so we're able to control our pipeline on that end. So 6 to 8 there.
Yep. And then on the cash side, Liz, where are we?
Super fast, and that's been such a great boon to my investors that are doing 1031 exchanges on big properties. It's almost no wait time. It's about a 45 to 60-day wait time, but you can do 2 at a time. And so we'll ask somebody on their second one, do you want to start over? And he'll say, yeah, I'll see you in 4 weeks. And then we've been able to even do 3 on the cash side for somebody doing a 1031 exchange. So I've been super awesome to see that unfold.
Well, and that's great because folks that are in a 1031 know that they are under that time gun. And it's great that you have ability to work with them because there has been times where the answer's just been, gosh, sorry, we can't. But I don't want people to be discouraged at a 6 to 8 month wait. Let's face it, there's a lot of work to be done if you've never bought an investment property. And it's probably not too early to reach out to you guys at the beginning of this process and at least get on the list, you know, have a conversation, talk about that process, because especially as people are new and trying to get inventory, they're probably not ready to pull the trigger in the first, few days.
Absolutely. Sometimes they are, but, and I kind of say, so we've been in business for 2 decades. If you have genuinely been setting people up with a successful investment for 2 decades, that is a finite product, how could there not be a line? if there's truth to what they're saying. And our little joke in the office is that the line is a Ferris wheel. I have names that have been on that list for 8 years, but they're at 10, 15 houses, and they get to the top, they get their house, they go right back on. But yeah, you're exactly right. Letting me add you to the list just gives me the opportunity to hopefully send you awesome investment properties via email one day. The whole system is set up for you to shop. So when you get to the top of this list, you just start getting 2 to 3 houses a week via email from me. Yes, there is a follow-up email saying it's gone under contract within a day or so. But the great thing is that identical house is going to come right back in a week or two, because we're building the same thing over and over again. One of our investors, actually a Real Estate Guys listener, once joked to me, I'm basically just buying the business model by the square foot. He pretty much will always take the first thing that comes down. But you're exactly right. That 6 to 8 months is me having as many conversations with someone as they like, learning about their goals, what we can do for them. If someone is inclined to come out and join one of our super fun group tours and get some barbecue, gives you time to do that. And that's going to help you swing at the perfect house for you when I'm shooting them to you via email. So, and it's a long, what is 6 to 8 months on a 15-year hold? When you look, to me, when you pull out to the bigger picture, it makes sense.
Well, I also think that it is the opposite of the strong-armed salesperson. What's it going to take to get you into this fine home today? It's like, no, you can't even buy if you want to. So, but I am also happy to hear that wait times have come down. They were up to pushing a year there for a while. Yes. And that just is the market. But, when is the best time to buy a property? Well, as soon as you can get one. So good stuff. Hey, let's talk about financing, because that obviously has had an effect. And you have plenty of folks, because of the price point, that buy for cash. I know a lot of times the international folks, that's kind of how they have to do it. But people do want a loan. They do want to get leverage. And you guys have been working on some creative strategies around this. Can you touch on that for a minute?
Sure, absolutely. So, in the beginning, it was folks that were tapped out of the Fannie and Freddie market, and they were just having to pay 100% cash. And we were seeing a lot of our buyers go to private lenders. The rate was 12%, 50% down, maybe a 10-year AM with a 5-year balloon. And so we put together a program and partnered with one of our local banks to where our buyers can put 40% down, not 50. They can finance for 12 years fixed with no balloon. And there are not 5 points up front, which is typical for a private loan. It's just a flat $1,200 loan origination. And it's a very aggressive product. It's between private hard money and your traditional financing. The interest rate's a couple of points higher than maybe your typical financing, because we take the paper and then we go to our bank, and then they basically give us most of our money back, because we don't have the deep pockets to be able to finance somebody like that. But it's the most competitive product that we know of in the market that is not your typical Fannie and Freddie money.
Yeah, and what you're getting for that little bit of a higher interest rate is, first off, it can be a non-recourse loan. So it's enormously popular with my SDIRA investors. Man, any of those listeners of yours that have looked around for non-recourse financing, it is rare, it is expensive, it is enormous loan minimums. And it's such a great, I think it's a perfect retirement product. Even the 12-year AM is kind of nice, because it's that you're paying off the house very aggressively, but if it's in your IRA anyway, and then you own it free and clear at that 12-year mark, your cash flow goes through the roof, possibly right as you're getting ready to retire. So non-recourse is in there. There's no underwriting. Your dog could probably go on the title. It's your LLC, any entity, the trust. I actually even used it personally. The very first house I bought from Terry, the Fannie Freddie lender did not like that my employer was verifying my income and selling me the house. and so I used this financing we'd had set up for overseas investors originally, and I refinanced it into, for me, what made sense was about a year later, I refinanced it into conventional. I've seen investors that aren't tapped out on their Fannie Freddies, but they want to save their 10 loans for the cheapest money there is for high cost of living markets. And then this is a great fit for them to build out here at the same time. folks love it, and it's available on kind of any house. It does also give you the faster cash timeline that we were talking about. We treat that alternative financing has the super fast close, the ease, the lack of underwriting that the conventional stuff does. So we do manage those houses at an 8% rate instead of a 10% rate. You get a management discount on the cash side and on the alternative financing side, as we talk about it, as we call it. So it's people love it.
Yep, absolutely. It's very popular.
Excellent. Love the creativity, especially when you've got a waiting list. You know, most people, like when they can't sell something, they figure out a creative way, but you guys listen to your buyers and figure out this stuff ahead of the game, which I really appreciate. Well, there's so much to talk about. Love the fact that you guys are doing these trips. So if you're interested at all in Memphis, spending a day with the fine team at Midsouth would be an excellent way just to, help yourself understand how the whole thing works. There's no obligation to buy anything if you do that, but they do give you a little credit for buying, which is kind of cool. So to find out about all that, what's available, how to get on the list, get in a conversation with Liz, all you have to do is send an email to Midsouth at realestateguysradio.com, and you'll get the skinny. Well, guys, it's been great catching up. Great to see you, and thanks for the work you do.
We love you, Robert. Thank you for having us.
Robert, thanks so much. Russ, appreciate you.
Always.
There we go. Our good friends at Midsouth Home Buyers. You've heard from them a lot, and now you know why. More when we come back. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
With everything going on in the world, don't let your lack of financial understanding derail your investments. Real estate investors need to see the bigger economic picture. The Federal Reserve, bonds and interest rates, precious metals, oil and gas, cryptocurrency, and the inner workings of monetary policy, just to start. If you're at all confused about how and why market metrics intersect and what it means to you as a real estate investor, take your understanding to a new level with the Future of Money and Wealth video collection. Discover the opportunity to hedge against inflation, deflation, and stagflation. Gain critical insights on real estate niches that perform well in challenging times, and learn specific strategies to fortify your balance sheet before it's too late. Simply send an email to future@realestateguysradio.com for all the details. The Future of Money and Wealth includes 20 videos of powerful presentations and panel discussions featuring Robert Kiyosaki, Peter Schiff, G. Edward Griffin, Dr. Doug Duncan, Simon Black, CPA Tom Wheelwright, Brian London, Dr. Chris Martinson, and many more. Email future@realestateguysradio.com today.
For thousands of years of human history, silver has been recognized as money. Then in 1965, the United States took silver out of the financial system. But did silver stop being money? Smart investors don't think so. And ever since, when there are concerns about the quality of the currency, alert investors seek shelter in silver and gold. As the size and frequency of major financial crises grow, silver is attracting a lot of attention. To help better understand the what, why, and how of silver, watch the free 9-part series, Making Sense of Silver. Everything you always wanted to know about silver but didn't know to ask. Featuring 30-year precious metals veteran Dana Samuelson. Send your email requests to silverseries@realestateguysradio.com. Whether you own silver now or you're wondering if it's too late, email silverseries@realestateguysradio.com.
Hi, this is Tom Wheelwright, best-selling author of Tax-Free Wealth, and you're listening to Real Estate Guys Radio.
And welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. Hey, if you've thought about doing bigger deals and raising capital, or just investing alongside larger operators for better returns, come on out to the Secrets of Successful Syndication. It takes place October 6th and 7th in Dallas, Texas. You can get all the details on the website at realestateguysradio.com under events. So we had a great chance to visit with Terry and Liz from Midsouth Home Buyers. Oh my gosh, love those guys.
How could you not? They clearly are very much into what they do. And one of the things that I really appreciate, and I had a chance to go out and take a tour of their operation, and we made a video about it. And so that's one of the things you get when you send an email to midsouth@realestateguysradio.com. But what you have to understand is Terry is not just a flipper. He's not just a turnkey guy. He's not just a property management owner. He's not just a prolific real estate investor. He's all of those things. But what he really is a businessman. And if you think about a business and not just a guy that you're doing business with or a team, but really a business consists of the team for sure, but also systems, processes, scale, infrastructure. And when you play the game at that level, you drive a lot of costs to do out. You create a lot of operational efficiencies, especially redundancies at critical functions. It's one of the reasons people who operate like that are able to deliver a consistently high level of quality because they have scale. And so there's a lot of things. If you're just a Main Street real estate investor out there and you're flipping houses, or maybe you're flipping houses and holding a few and selling a few, it's kind of how Terry started. But it's very instructive. If you get a chance to go out and tour his operation, take a look at Memphis, whether you're an investor or an aspiring turnkey guy yourself, it's probably worth taking a look at, because that's what impresses me most about what they do. They love it. Doesn't need to do it for the money. He's well past that point, but he cares about his community. He and Liz have been doing this thing together since forever. And I know people get tired, as you mentioned, Robert, of hearing the same old ads here on the Real Estate Guys, but they've been big supporters of the show for a long, long time. And I know many of our listeners have spent time with Terry and Liz and done business with Terry and Liz. We get nothing but rave reviews. So love those guys, love that market. And I think it was so fun to catch up with them in this episode.
You know, if you're trying to figure out what real estate market makes sense, I always say live where you want to live, but invest where the numbers make sense. The numbers make pretty good sense in Memphis. Not saying it's the only market, but when we talk about that framework, personal investment philosophy, market, team, and property, I've always said that I will take a lesser market with a better team than a better market with a lesser team. And when you can get a great market and a great team, that's a pretty good combination. Liz has been in this business for a long time with Terry, and their entire operation is just incredible. But she does have that heart for new investors. So if you haven't invested before, don't feel like you're going to waste her time. If you're interested, you just send an email to midsouth@realestateguysradio.com, and you'll learn about what they do and how they do it. And just understand it is a bit of a wait, but good things are worth waiting for. So big thanks to Terry Kerr and Liz for being on the program today. We've got a bunch of great shows coming up. And if you've ever thought about doing bigger deals to raise capital to get around bigger apartment deals and retail and development and construction and land and all of that, well, you ought to come out to the Secrets of Successful Syndication. We do this 2-day event twice a year. It's coming up in early October in Dallas, Texas, and it's going to be amazing.
Well, one of our students actually has gone, and we joke about this all the time, been on the show, especially for Halloween horror stories and other things, a lot of experience, real world experience, good, bad, and ugly. But he started out coming to the event, and he's gone on to raise, I think, $25 million, single family homes. I think 240 single family homes. So you don't have to move on to bigger properties necessarily. You can build a nice portfolio of bread and butter little green houses and take your investors along for that ride. So there's a lot of good things happening out there on Main Street right now. There's a lot of opportunity, especially in the area of private capital as lending gets tight, conventional lending, some of the problems in the financial system during that interim while they're working themselves out. It's an opportunity for people that are a little nervous about the stock market and want to find a way to get their money into Main Street. They can do that through Main Street Syndicators. So Secrets of Successful Syndication. Send an email to syndication@realestateguysradio.com. Learn all about that. And I'd love to have you come out and check that out and get a chance to meet this particular gentleman and many other people who are having success in the business.
We'd love to have folks come to our events. We also speak at a lot of other events. Like you mentioned, we just got back from George Gammon's Rebel Capitalist Pro. If you want to know where the Real Estate Guys will be, just go to realestateguysradio.com under events. Next week on the show, it's Clues in the News, where we take a look beneath the headlines. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Midsouth Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton.
Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.